Good morning. This is Horizon's Middle East and Africa, our top stories this morning. President Donald Trump says the U.S. is doing, quote, very well in its military campaign against Iran, even as the timeline and objectives remain unclear. Tehran is still targeting Israel and Gulf states as the U.S. sinks an Iranian warship in international waters, marking a first since World War II. And Asian stocks rebound with the Kospi jumping and the regional benchmark heading for its first gain in 4 sessions. But caution persists as oil and gold climb. It's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Well, a more positive handover today from some of these Asian bourses. The MSCI Asia Pacific up 2.9%, as you just saw in those headlines. A massive rebound for the Kospi as well. We will talk about that in just a moment with our colleague Winnie. But take a look at S&P futures, not doing a whole lot today, down about 0.1%. Just before we went on show, I went and I tracked how the S&P has performed since the start of this war. And I was surprised to see it is only down about 0.6%. So there hasn't been a huge notable risk-off reaction, at least as far as the U.S. main benchmarks are concerned. So something to think about there. Tracking for the week, 0.6% weaker. Yesterday, a more solid day for the S&P. We also got better U.S. data. So PMI services numbers better than expected. PMI employment also coming through. The ISM employment coming through better than expected too. So the U.S. economy seems to be doing fine for now. Brent still in our focus, up 3.3% today. We talk about ongoing attacks on energy infrastructure. The Strait of Hormuz still effectively shut, so the ramifications on global energy markets continue to be felt. 10-year yields back up at 4.12, so we've moved up about 15 basis points throughout the course of this week. And of course, there investors are pricing in for the possibility of a sustained inflationary shock on back of what's happening in energy markets. And then the USD also acting like it usually does. And as a safe haven, it's actually been bid this week. We are up 0.2% today. Okay, let's switch over and talk about how markets in Asia are faring this morning. Winnie Su is in Hong Kong for us. There is more green on the screen and, of course, those big announcements out of China today as well.
Yeah, morning, Jumana. As you mentioned, that MPC is really happening right now, and initial reaction from the market side is looking pretty positive. You've got the CSI 300 jumping more than 1% because the growth target pretty much came in line with market expectation, although it is the most modest target in more than 3 decades at around 4.5% to 5% range. But it's quite reasonable given the external shocks and also internal weak demand. However, we are seeing a bit of gains pairing, especially in the offshore market. Some traders also flagging some more concerns around the war, especially now that Chinese government is telling its top refiners to suspend exports when it comes to gasoline and diesel. Now, when it comes to the cross-asset space, the yuan strengthening just a bit with the PBOC setting a slightly stronger fixing, and it's actually the strongest since 2023. And that is interesting given that it seems like the weak GDP target is not really stopping the PBOC from seeing a stronger yuan going forward. Now, flip the board and take a look at the broader Asia market, because like you mentioned, it is quite a nice rebound that we're seeing in Asia, with gains led by the Kospi up about 11% after having its worst day yesterday. However, it's also worth noting that overall Asian stocks is still under a bit of pressure when it comes to the Iran war. You just mentioned the weekly performance. We're actually down about 5% or so versus the S&P flat, and that is still partly driven by how we have so much exposure when it comes to the oil imports, and now oil up for a 5th session. Back to you, Jumana.
Winnie, thanks so much. Amazing volatility on the Kospi the last couple of days. Winnie Su in Hong Kong. U.S. President Donald Trump has expressed confidence in the U.S. military campaign against Iran, even as the duration of military operations still remains uncertain. The conflict is so far showing no signs of abating, with Tehran again targeting Israel and Gulf states. The U.S. has also sunk an Iranian warship in international waters, marking the first time since World War II an American submarine has attacked a surface vessel.
We're doing very well on the war front. We're in a very strong position now, and their leadership is just rapidly going. Everybody that seems to want to be a leader, they end up dead. Their missiles are being wiped out rapidly. Their launchers are being wiped out. We're in very good shape now. I want to let you know that, and we will continue forward.
Joining me now is Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia, and from Jerusalem, Bloomberg's Dan Williams. Stuart, let's pick up on those comments from President Trump overnight, framing that they're doing very well. What do we know about the intensity of the U.S. operations, joint U.S.-Israeli operations on Iran right now?
They are incredibly intense. And look, he's right. They are doing very well. They have, as far as we can tell, total and utter dominance of the skies, which basically allows them, as he says, to take out the missiles and the missile launchers and anything else they fancy, up to and including sort of decapitation of the leadership, both across the political spectrum and the military spectrum. They don't seem to have gone after the nuclear scientists quite so much this time round, but again, that's an option for them. So he's absolutely right. But what they're contending with is an Iran that has basically decided to have a completely different playbook. They know they're massively outgunned, so as you've seen, these attacks across the Gulf now extending to economic infrastructure, both shipping and energy. And in effect, what they seem to be trying to do is to pressure the Gulf to in turn pressure the US and Israel to basically pare back those attacks. Now, it's not being effective at all at the moment, but we're on day 6, I think, at this stage. Yeah.
Okay. Let me put that question to you, Dan. What is the IDF assessment of Iran's offensive capabilities right now?
Well, back of the envelope, and I'm combining U.S. assessments here, at the outset of this war, Iran was said to have had 2,500 intermediate-range missiles. Those are missiles capable of reaching Israel, and several thousand more short-range missiles. Those would be capable of reaching Gulf Arab states and U.S. bases in the vicinity. Now, we had the Pentagon briefing yesterday where the chairman of the Joint Chiefs said that Iran had thus far fired around 500 or more of those missiles, which would seem to have far more in store. However, as Stuart noted, the Americans, and indeed the American president, have said they're wiping out missiles on the ground and missile launchers being the tactical bottleneck here. Very hard to fire arrows if you don't have an archer or a bow. And if those launchers have been dismantled, in large part, it really doesn't matter how many missiles the Iranians have left, they won't be able to fire them into the air. However, those figures are yet unknown, so we're left judging things by our experience on the ground. As you noted, the firing has continued, indeed, overnight tonight. Tel Aviv and its vicinity had 3 sets of sirens. However, I'm not aware of any damage or casualties from those, so it appears that perhaps those were single launch volleys from Iran, single missiles launched each time, the objective being to jar the Israelis, to jar them in the middle of the night, and remind everyone that Iran is still in the fight.
Yeah. Stuart, let's pick up on what Dan was saying there, and also a conversation that you and I had yesterday, which is that Iran seems to be leaning a lot more on their drone capabilities as opposed to ballistic missiles just in the last couple of days of these attacks. And yet, as we've seen, these drones can still cause a considerable amount of damage. They still appear to be targeting key energy infrastructure sites. Yesterday afternoon reported that once again they targeted the Ras Tanura refinery at Aramco. The strait is effectively still shut. So even though they've shifted what they're firing, they're still causing an immense amount of damage.
They are, and you know, there's a psychological impact there as well. And the issue here is the scale at which they can do it, because these are not expensive bits of equipment, but often they require incredibly expensive bits of equipment to knock out of the sky. So there's an asymmetry there, and you know, the notion that they can be producing hundreds and hundreds of these a day, we don't actually know, of course. That is entirely speculation, but given the number that are being launched, you know, it's not beyond the bounds of possibility. And what's interesting is this signals, I suppose, this change of warfare, you know, and you've seen that in the Ukraine-Russia war as well. And Ukraine, I think, is now pretty much the preeminent technology, as it were, in knocking these things out of the sky. So it'd be interesting to see how that develops over the next several weeks. You know, they need to move away from the conventional warfare.
Yeah, and whether any lessons have been learned from the Ukraine-Russia war when it comes to intercepting those drones. Dan, I want to come back to you on the other front that has opened up very much live the last couple of days, and that is Israel's front in Lebanon. As well. Yesterday, the Lebanese Minister of Social Affairs saying that 72,000 people have been forced to evacuate southern Lebanon. That's on back of a notice that the Israeli Defense Force has sent to residents of the south, warning them to leave to the northern part of the Litani River. How does what Israel is doing in Lebanon tie in to the war objectives in Iran?
Well, this offensive with Lebanon is actually an offensive against the Lebanese party Hezbollah, which is an Iranian asset, an Iranian client, an Iranian ally, wedded to the Islamic Republic through ideology and religious zeal. So initially they stayed out of this round, but then fired on Israel after the Iranian supreme leader was assassinated in the Iranian capital. That appears to have been seized on by the Israelis as an opportunity to reopen that front that had been fairly quiet since the ceasefire of November 2024. The Israelis are now ordering a mass displacement from the south of Lebanon. That has traditionally been the fiefdom, the unofficial statelet of Hezbollah, at least before this war, this major regional conflict. And it would appear they're planning on pounding those villages, suspected Hezbollah sites, in order to finish the job, as they would say it, in terms of defeating Hezbollah. The big question on everyone's minds is whether this will be followed by a large-scale ground incursion. So far, Israeli forces have seized positions just over the border. Are they willing to go all the way up to the Litani River, which is the natural geographical cutoff point for southern Lebanon, effectively reimposing a buffer zone and occupation zone, something that was seen a couple of decades ago, in which the Israelis abandoned in the year 2000. So that is very much an active front, and I think much depends on whether Hezbollah will desist or whether the Lebanese state will manage finally to rein in Hezbollah.
Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia and Dan Williams in Jerusalem. Thank you so much. Asian equities rebounded as markets regained composure following a surge in volatility sparked by the Middle East conflict. For more insights, Ayesha Tariq, Macrovisor co-founder, joins us from Dhaka. Ayesha, always good to talk to you. How much of a shock is this war to the global economy?
Good morning, Jumana. First of all, let me just say I'm so glad that all of you are safe over there. It's been quite a few difficult days, I think, for all of you. Now, in terms of the global economy, I think, it's something that we're not factoring in completely. So although Goldman Sachs and a few other big analysts have put a number to, the decline in GDP, I don't think we've really modeled this left-tail scenario that we thought may never happen. So honestly, I think the shock is far-reaching and the impact is wider than expected.
Why are we seeing a limited reaction in the S&P? I noted it at the top of the show. Since the inception of this war, we're only, quote-unquote, down around 0.6%. Why is it not reacting more?
Again, I think that everybody's thinking that this should be resolved very quickly. I think we're seeing a lot of positive statements coming out of the U.S. about being in control of the war. But I think the truth is the longer this drags on, the worse it's going to be. And markets are inherently underpricing the risk over here. As you've noted, it's only down 0.6%, and that's not much. I think the market is looking more towards, oil prices and the inflationary threat over here. But more than that, I think the bigger threat is that many countries are actually running out of oil and other materials. So, for example, where I am right now, Bangladesh, we have only 2 weeks worth of energy stockpiles. And then there are other materials as well. For example, 25% of India's fertilizer imports comes through the strait. We have LNG, 20% of the global, LNG production offline. And finally, we're also seeing sulfur take a hit because sulfur, 40% of the world's sulfur comes from the Middle East. And that's used for leaching copper and uranium. Again, two very, very important metals. So I think everything combined, this impact is not being taken into concern. And it's because we didn't expect any of this.
Ayesha, is stagflation your base case scenario now?
I think it is. So no matter what happens from here, Jumana, I think even if the war stops today, for example, by the time all this comes back online and everything starts, so the bottlenecks start moving again, it's going to take a bit of time. So, for example, if you noticed yesterday, Qatar announced that it would take about 4 weeks to get back to full capacity. So that's about a month. And then you have other sources also saying that, for example, oil movement and coming back online will take, again, another 3 to 4 weeks, maybe 6 weeks, some say 8 weeks. So when you have a situation like this, even if things get resolved today or tomorrow, we're still looking at a runway of about 4 to 8 weeks before everything is back to normal. And during that time, obviously, we're pushing up prices and we're going to see stagflation.
Yeah, and Ayesha, I mean, we in the run-up to this, we've been talking about the shakeout that had occurred in some of the industries that are perceived to be most disrupted by the advent of artificial intelligence. And actually, you know, this is not on a lot of people's radars, but we're still seeing a massive repricing of private equity firms. Again, you know, some of the software names continue to get hit as well. And I wonder how much of the reaction that we're actually seeing in the S&P today can be pointed back to that, as opposed to the disruptions in energy that we were just talking about.
So again, that's a little surprising. Actually, I would think that that would be priced in a little bit more, but markets still seem to be quite optimistic on that front, because those worries, as you rightly pointed out, have not gone away, right? So we still have the issue of overspending on CapEx, and we still have the software issues. And mind you, it's actually a seasonally weak period for us in the first 2 weeks of March. So everything considered, I think the market's holding up quite well. But don't be surprised if, you know, the market goes lower from here before it gets better. I think we still need to keep an eye on all those issues. And if CapEx starts to roll over for these companies, I think we'll see a bigger hit at that point in time.
Ayesha, always good to chat to you. Thank you so much for bringing the perspectives from Bangladesh. Also very interesting what you were saying about stockpiling over there as well, and how much energy stockpiles Bangladesh are sitting on. Ayesha Tariq, Macrovisor co-founder. Now, up next, President Trump says he's confident in the U.S. military campaign. We'll discuss how long the war could last with a retired Major General of the U.S. Army. This is Bloomberg. U.S. President Donald Trump expressed confidence in the U.S. military campaign against Iran, even as the duration of military operations remains uncertain. But former Secretary of State Antony Blinken says real change in Iran will require a sustained military focus in the Middle East that could wear down U.S. weapons stockpiles.
What I'm worried about, one of the things I'm worried about, and this gets to the second and third order consequences, is we so deplete our arsenal, and it takes a long time to rebuild it, that puts us in a disadvantageous position when it comes to, say, a China or a Russia. All of those things need to be factored in. And again, it's one of the reasons why if you're going to undertake something like this, you've got to make sure that you've factored all of that in.
Joining me now is MacCarley, retired Major General in the U.S. Army and Managing Attorney from MacCarley and Rosen. Really good to have you with us. The last time we spoke was, back in the 12-day war between Iran and Israel. And at the time, we were wondering what could happen next. And here we are. And now you've got a war that has brought in almost 13 countries around the region. We just heard from former Secretary of State Antony Blinken there, and he said that there are two things that will determine the longevity and also the outcome of this war: munitions and markets, which is interesting. How much appetite do you think the American public has right now to sustain a prolonged war in the Middle East?
Oh, my gosh. That's one of the most difficult questions, because you're asking a retired general to assess and speculate as to the totality of the American interest in continuing a military campaign. Americans, as we've seen Americans over the last 50 or so years in the campaigns in which America has found itself, and that would include Vietnam, and we move forward to the Gulf War, which was thankfully very, very quick in terms of the amount of time we had boots on the ground. And then we move into the real challenge that has been the subject of examination by you and all sorts of strategists and historians. And that, of course, is the operation that we conducted in Iraq and Afghanistan, neither of which could be deemed successes, especially as we examine Afghanistan, how we got into it, and how we got out of it. But I just wanted to make a comment. The Secretary was absolutely right on, as I see it from my perch as a military officer, meaning we are going to have a serious problem with maintaining the op tempo, meaning the operational tempo of this campaign, using highly sophisticated, our most important high-tech weapons, whether they be air defense, the THAADs, and others that are employed. And once the concern would be that our operational effectiveness would very quickly degrade if we essentially run out of munitions that are not only important to this campaign, but as I've talked,
but let me ask you, because that's a really important point there. I think everyone was taken aback at the rapidity of the Iranian response retaliations and how much of it was targeted at Gulf states and U.S. assets in the Gulf states. There's been a lot of reporting about whether, and this is again, reporting, questioning whether the U.S. has sufficient amount of interceptors in the region and whether they are being replenished quickly enough. How much of a danger is that, do you think, to what the U.S. are trying to achieve here with their war objectives?
Well, I can be real precise and concise and say it's a huge, dangerous impact on the effectiveness of this operation in Iran on the part of the United States. But not only should we just refer to my comment, but we've got a laboratory about 1,000 miles to the north, and that's Ukraine. The same issues have surfaced repeatedly in that country, meaning the Russians are firing 300 or 400 or shooting 300 or 400 Shahads. They're shooting their ballistic missile arsenal. Once in a while, they're hypersonics. And the biggest concern on the part of the Ukrainian military is the fact that the Ukrainian military does not have a sufficient number of air defense and missile defense systems to counter this barrage. And now that's become even more critical. Iran and all of our other involvements, that we are going to run out of the type of hardware that has made these air campaigns so effective at little loss of American life. And I say that with great concern and empathy for the families of those American soldiers who have just recently lost their lives in this particular campaign.
Yeah. And let me just round up by asking you, the last couple of days, Iran has been shifting more to the usage of drones as opposed to ballistic missiles. In your view, do you think that this is because they are preserving the use of the more sophisticated weapons for later on in the war, or is it a reflection of just the fact that their own stockpile of ballistic missiles is beginning to run out?
I mean, at the end of the day, the operational commanders in Iran are going to make a decision that's always driven by logistics, meaning what are the stockpiles of Shahads, which are Iran's go-to one-way attack drones versus the number of ballistic missiles. And the Iranian leadership is going to say the ballistic missile cost us in US dollars hundreds of thousands, if not millions of dollars, to shoot highly sophisticated ballistic missiles, and you can shoot or send, not really shot, but send a Shahad into, for instance, UAE, other countries that surround Iran, and the cost is maybe 1/10 of the cost of the ballistic missile. So why not come with a slew of these things?
Mark MacCarley, retired Major General in the U.S. Army and Managing Attorney at MacCarley and Rosen. Very good to get your perspectives on the show today. Thank you for staying up late for us. Well, coming up, we discuss the state of the global LNG market as competition heats up for supply sparked by the Iran war. We speak to Rashid Al-Mohanadi from the Middle East Council on Global Affairs next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. President Donald Trump says the U.S. is doing, quote, very well in its military campaign against Iran, even as the timeline and objectives remain unclear. Tehran is still targeting Israel and Gulf states as the U.S. sinks an Iranian warship in international waters, marking a first since World War II. And Asian stocks rebound with the Kospi jumping and the regional benchmark heading for its first gain in 4 sessions. But caution persists as oil and gold climb. It's just on 9:30 a.m. across the Emirates. I'm Joanna Bersace in Dubai. It is day 6 of this war. And what you're seeing, actually, surprisingly, the handover from Asia Pacific today is remarkably robust. We're up almost 3% for the Asia Pacific index. The Kospi now scaling gains of more than 11%. And even Wall Street yesterday brushing aside some of the concerns of the war in the region. The S&P ending up in positive territory. And we also had better data come through on services and also unemployment in the U.S. as well. So the background to the U.S. economy as of now seems to be okay. S&P futures down about 0.2% as we head into the European Open. Brent now, take a look at the price action, up almost 4%, so 3.5%. Today, we're getting closer to $85 and seem to be getting closer to triple digits at this point here. We are up 20% just in the last 5 days. And that's what's been happening with the oil complex as we continue to speak about the effective closure of the Strait of Hormuz and ongoing attacks against energy infrastructure in the region. 10-year yields at 4.12, so up 2.5 basis points today. Better data in the U.S. plus inflationary fears means U.S. yields have been lifted. And then the USD also getting a bit this morning, up 0.2%. Now, let's turn to the big story from Asia as well. China has set its most modest growth target in more than 3 decades and a shift towards more sustainable growth drivers. Bloomberg's Min Lo joins us right now from Beijing. So let's talk about that 4.5% to 5% growth target, Min. It feels to be pretty modest. Why is that? And just take us through the headline numbers, what else we heard from the MPC.
Yeah, definitely 4.5% to 5% is the slowest growth ambition that China has had since 1991. Also, it's a range instead of a specific number, which shows that the government is perhaps giving itself a little bit of a wiggle room here. Instead of focusing so much on hitting the target, they're giving themselves some breathing room to focus on longer-term growth, tackling some of the structural issues, replacing some of the older growth drivers like property and infrastructure development, and fostering some of the newer growth drivers like the tech-intensive sectors like 5G, quantum computing, robotics, aerodynamics, aerospace, and so on. And so this is one of the key takeaways is that the growth target is going to be slower, which means it reduces the pressure for local governments to unleash aggressive stimulus on the economy as well. We have, of course, the inflation target in focus at 2%, the same as last year. But if you note Premier Li Qiang's speech, he had slightly stronger language when it comes to his signals on inflation, calling for a modest rebound in prices, calling for prices to return to positive territory. And this is important because some economists are saying that the real growth target is starting to become irrelevant in a context where the GDP deflator has been negative. And if China can really hit that 2% inflation target, it will be very significant because it would bring the nominal growth to between 6.5% to 7%, which will be pretty significant. I think the big surprise here is the defense budget at 7%. It is slower than the previous few years of 7.2%. And that is quite surprising, especially in the context of regional countries in the region raising their defense budget, including Korea, Japan, the US as well, also at a time when China has been going through significant purges in the military.
Yeah, that is interesting on the defense side of things. Are there any other policy initiatives that caught your eye that perhaps would be representative of more targeted fiscal stimulus to come out of China?
Sorry, I couldn't hear you, Joanna. Could you repeat your question?
Are there any other policy initiatives that caught your eye, Min?
Yeah, in terms of policy initiatives, certainly we got a hint of the 15th five-year plan as well as the growth priorities this year. The first priority is boosting domestic demand. But in terms of the actual measures, there's a little bit of a disappointment. In terms of the scale of the stimulus, we're talking about 250 billion yuan in consumption upgrading subsidies. That's slightly smaller than last year's 300 billion yuan. There is 100 billion yuan that is earmarked for consumer loan subsidies. There has been a focus on boosting people's income, but little in the way of specifics. There's also about, I believe, 300 billion yuan for large-scale industrial equipment upgrading, and this dovetails with the second priority, which is to transform the traditional industries to foster the new growth drivers. And it still tells you that China, in some ways, still views consumption as very much a derivative of strong manufacturing as well. The other disappointment in the 15th five-year plan is there was no target set for growing the share of consumption in the GDP. Some economists were hoping they would set a target of between 45 to 50% to signal their commitment to raise that share, but there was no target set. There is, however, a target set for growing the core digital economy to 12.5% of the GDP. And again, that puts tech self-sufficiency and the new growth drivers in focus, with the government pledging to spend at least 7% of the GDP in R&D for basic research and, of course, boosting self-sufficiency in the core areas like semiconductors, quantum computing, and the like.
Min, excellent overview of what we had at the NPC today. Thank you for bringing us all those numbers as well. Min Lo, we appreciate it. Also, it looks quite cold out there, so get yourself somewhere warm. All right. Former U.S. Secretary of State Antony Blinken says an off-ramp for the Iran conflict will be governed by two factors: munitions and markets. Blinken also told us exclusively that a sustained war effort may leave the U.S. vulnerable.
What I'm worried about, one of the things I'm worried about, and this gets to the second and third order consequences, is we so deplete our arsenal, and it takes a long time to rebuild it, that puts us in a disadvantageous position when it comes to, say, a China or a Russia. All of those things need to be factored in. And again, it's one of the reasons why if you're going to undertake something like this, you've got to make sure that you've factored all of that in. And again, it really should start with explaining to the American people why you're doing something, why it's necessary, why now.
Do you see an off-ramp anywhere at this point?
I do, in the sense that, one, as I said, I think the off-ramp will be governed by this question of munitions and markets. Mm-hmm. And then what is that off-ramp? I think the president may simply declare victory. He'll say, got rid of the Ayatollah. We diminished or degraded or destroyed their nuclear program. Again, we did the same thing to the missile program. We did the same thing to the Navy. And as to the regime, well, over to the Iranian people. Good luck to them. Hope they succeed. And if they don't, it's their fault. If they do, we'll take the credit. How Iran responds to that remains to be seen. And for the regime, survival is success. Right now, the expectation seems to be, at least as has been reported, that the Ayatollah's son is his successor. He's very tied into the IRGC. And so you may have a situation where, much as we want, and everyone should want to see a change in that regime, we have, regime change without regime change.
Status quo.
Status quo. And even potentially, even worse, because it may simply ultimately reinforce the IRGC, the military, mm-hmm. the specialized military. And part of the problem with these things is that it's very hard to produce regime change from outside. You can't bomb your way to it. We've had a lot of experience with that, and not such good experience over the last 20 years. It's even not so likely to come from the streets, even with the extraordinarily courageous Iranian people. It's more likely to come from kind of within the palace. And then it could go in any one of, multiple directions. You could get more pragmatic people, not good guys, but more pragmatic people who are open to, curbing the excesses of the regime, focusing at home instead of focusing abroad, doing deals. But right now, it looks more likely that you're going to have hardliners.
Former U.S. Secretary of State Antony Blinken speaking exclusively with Bloomberg's David Gura on what's going to determine the outcomes of this war, alongside what could happen next in Iran. Interesting perspectives there. Now, turning to energy, at least 3 LNG tankers have diverted towards Asia from their course heading to Europe. Now, that's as Middle East turmoil spurs competition for the fuel, while freight rates set fresh records and add to market volatility. Earlier this week, Asia became a more profitable destination than Europe, following a price rally sparked by Qatar's decision to halt production at the world's biggest LNG plant on Monday. To discuss further, joining us is Rashid Al-Mohanadi, non-resident fellow at the Middle East Council on Global Affairs. A week ago, I think energy traders are probably concerned about where this could lead to. And many people are now saying we're very much staring down the barrel of the worst case scenario of how things could have unfolded here, with the effective closure of the strait, energy infrastructure continuing to get hit. How do you see this moment?
Well, it's a watershed moment. It's a very critical time in our history as an energy exporting nation. Just to give some numbers to the viewers, Qatar and the Gulf region constitutes about 20% of global LNG exports, about 21 to 22 million barrels per day of global exports, which is also another 20%. And about 1% of global ship tonnage is parked either outside or inside the Strait of Hormuz. So it's a very critical situation, and the effects are and will reverberate globally.
Do you think there's some concern about the longer-term impact of all of this, and that Europe may seek to buy alternative suppliers? Is this something that the authorities are thinking of later down the track?
Of course, closing and opening the biggest LNG facility in the world is not like opening and closing an electronic device. It's something that takes time to ramp up, ramp down. There are a lot of security and safety concerns when you do that. So it is a risk, but also it's everybody's risks, because you cannot just suddenly change or replace 20% of LNG exports and 20% of cheap, reliable energy exports with what's available in the market. It's something, if on the long term, the market has to adapt. But on the short term, the effects, we're already seeing the effects with the hikes in gas prices.
Let's talk about those hikes in gas prices, because it's been most notable for European gas prices, for UK natural gas prices, but not so much for US gas prices. We have a chart that we're just showing up here, showing the blue line is showing the spike in European natural gas prices, but US natural gas prices haven't really moved that much, and perhaps indicates that the US is somewhat immune, at least to the gas shock that's emanating from this. Is that your perception as well?
Well, the US is a net gas producer, so the immediate effects will not be seen. But let's look at reliance when it comes to Asian consumers. So between Japan, South Korea, China, and India, the reliance of Middle Eastern energy varies between 50% and 90% in some cases. The energy there is not used only for electricity. The oil and gas and sub-products are not used only for energy. They're used for different industries. So, for example, one of the byproducts of LNG is helium. Qatar is the biggest exporter of helium. Helium is one of the main feeds into the semiconductor industry. So the reverberations of this closure can actually overheat different sectors, not just the energy sector.
Yeah. I was also reading about fertilizer as well being very much impacted by it all. Yesterday, the President Trump, announced a plan to introduce naval escorts for vessels looking to cross the strait and lower insurance premia for those choosing to take on the subsidized rates. Do you think this is going to be a game changer at all for companies and for vessels who have been waiting to cross?
So this reminds us a lot of the 1980s when, during the Iran-Iraq war, the tanker war started and the U.S. got involved. I think in this case, we won't see only the U.S. involved in trying to open up the strait and clear up a route for energy exports to come out. We see China sending their special envoy on mediation to the Middle East also to find a solution. So I think this is a problem that the world will have to join up together and fix. And just to answer your question,
what do you think?
Just to answer your question, I think with everybody pitching in, the strait has to be opened.
Okay, yeah. Where do you think the off-ramp is going to come from here? Just putting on your, let's put the energy perspective aside and think about geopolitical ramifications. What could bring about an end to this war?
Well, from a Gulf perspective, this wasn't our war. We did not start this war. On the contrary, Qatar and Oman were at the forefront of trying to find a diplomatic solution. But unfortunately, that didn't happen. There are no wars that finish by total defeat, especially in the contemporary world. It has to be solved at the negotiating table. How does that negotiating table look like? Who's at the negotiation table? I think it's subject to what will happen in the next few days. But in the end, a negotiated solution is the only sustainable way forward.
Rashid Al-Mohanadi, the non-resident fellow at the Middle East Council on Global Affairs, thank you so much for joining our show today. And just as you were conducting that interview, I want to bring you some comments that have come through from Iran's semi-official Noor news agency. And they are denying that Iran is denying that it launched any missiles against Turkey. And of course, that is in reference to the missile that was shot down by NATO allies approaching Turkey. Iran are saying that they deny launching the missiles against Turkey. There was also other reporting suggesting that maybe that missile had been directed towards Syria or towards Iraq. Iran's semi-official news agency now saying they are denying launching any missiles against Turkey per se. Now, Dubai stocks fell the most since 2022 yesterday, tumbling more than 4.5%. The Abu Dhabi index also fell on Wednesday upon reopening, but was able to recover some of its losses. That's as the U.S.-Israel war in Iran weighed on sentiment. Both bourses were closed on Monday and Tuesday to protect the Gulf states' key markets. For more, Farah Al-Bahrawi, who leads our equities team, and Srinivasan Sivabalan, senior editor for emerging markets, joins us now. Farah, let's start with the price action yesterday. I think many people are waiting to see how the Dubai and Abu Dhabi stock exchanges were going to open up. They did open up down in the red. What is the outlook here for these UAE bourses?
Morning, Jumana. Absolutely, you're right about the losses we saw yesterday in the market here in the UAE, and the concentration was really in Dubai, as you say. This is a market that was up about 300% over the past 6 years. Dubai was a play on its economy, on the real estate prices, on it being the Middle East financial hub. Such a strong recovery from COVID, and now profit-taking was absolutely expected. We didn't reach that limit, down 5% on an index level, but we did get there among some single names such as Emirates NBD, Emaar Properties. What's the outlook? Some people say Dubai's stock market is vulnerable because of that play, the fact that it's such a cyclical play at a time of war, it just naturally has to come under pressure. But then you have other people like those at Cantor Fitzgerald. They initiated coverage on 7 banks in the United Arab Emirates with such bullish ratings, 7 overweight ratings, some price targets as high as 80% from current levels. And they say that this is still a market that's low risk and high return.
Srini, up until a week ago, I would say, we'd been talking about how well emerging market assets had been doing. Yes. And MSCI, massive outperformer this year. Yes. But of course, over the course of this week, it's taken a substantial hit. I think the MSCI emerging market index is down anything from 6 to 7%. We saw a bit of a rebound yesterday. Why is this having such an outsized impact on emerging markets?
Well, the irony here is that while the geopolitics coming from Middle East has been the trigger, it was not the reason for this sell-off. most of the losses that we have seen in the last 3 days, I mean, almost 10% of losses on the benchmark index came from South Korea and to a lesser extent Taiwan in artificial intelligence stocks. And if you look at the details, most of the losses came because of margin lending and because of investors having exposed themselves to leverage. For every dollar they invested, they had borrowed $2 to invest. And the unwinding was faster there because of this. I mean, it almost reminded me of the 1995 Barings collapse, Nick Lee's and the rogue trader kind of collapse because of the Nikkei. Because it was led by leverage rather than a geopolitical shock. This was a trigger, momentary trigger. And today you are seeing, as you said, the rebound is happening. And that's very clearly showing us that geopolitics has had a temporary effect, but is not changing the fundamental argument that we have been making for emerging markets in the past months.
So interesting. So it's a catalyst, but not necessarily the cause.
Yes.
Farah, I'm keeping a close eye on European markets as well, given the European countries' exposure to energy and the gas that comes from the region. I think people there were quick to price in a stagflation scenario for European countries. Talk us through the reaction in specific sectors across European indices this week.
Absolutely, Giovanna, you're right. It's that stagflation fear that's really coming into the forefront here, or at least there in the market in Europe. So banks, that has been a market that, or a sector that's dropped sharply this week because of higher bond yields, because of prospects of interest rate hikes from the ECB. So banks have been under pressure. You have a lot of sectors like chemicals that rely on energy quite heavily, being named as one of those that are in threat. Autos, travel and leisure obviously has been another one due to the travel disruptions, but also due to the high oil prices. On the flip side, energy, or the people that produce oil, they obviously have been among the outperformers this week. So the market has been under pressure. The Stoxx 600 was down about 3% at some point, but yesterday there was a rebound about over 1%. So market is not 100% decided yet on how this war plays out in terms of the way it impacts the market there, but a little bit of caution there.
Farah, thank you so much. Farah Al-Bahrawi, who leads our equities team, and Srinivasan Sivabalan, as senior editor for emerging markets, for your perspectives. Now, air travel disruption across the Gulf is deepening as conflict in the region forces airlines to ground fleets and suspend key routes. Emirates says all flights to and from Dubai will remain suspended until the end of Saturday. For more, we're joined by Bloomberg's Lean Al-Rashdan. Lean, just give us the latest on the flight suspensions and also some airlines operating with limited operations right now. What is the latest?
So since last Saturday, there's been over 23,000 flights canceled. And I mean, those are really, really huge disruptions. Most of the airspace is still closed. What the UAE and Qatar have been able to do is create safe air corridors where they can operate a limited number of flights. And that's just going to be for evacuations. And some have been to bring in medicine into the UAE. But still, flights are canceled. Regularly scheduled flights are still canceled. And Bahrain, Kuwait, UAE, and Qatar, their airspaces are closed, and people are having to go to Oman and Saudi Arabia to evacuate from those countries.
Yeah, I mean, how quickly could normal flight operations resume once airspace reopens? Or, are we talking about weeks of potential knock-on disruption once things sort of normalize?
So yesterday we talked to Kuwait's low-cost carrier Jazeera Airways, and they said that they could be operational within 6 hours of the airspace opening. And that's just for any specific airline. They will take a few hours just to be up and back and running. But for us, the passengers, it's going to take weeks at least to get everything back on track. You're not going to be able to book a flight. They're mostly going to be dealing with the backlog. They're going to have to be dealing with the luggage. They're going to have to deal with all their planes that are out of position, all their cabin crew that are scattered around the world. It's going to take weeks, and I mean, the impacts could be potentially up to months. There's going to be huge financial losses for these airlines, and this is going to affect airlines globally as this airspace has become so important for global traffic.
Yeah, for sure. Key corridor connectors between East and West. Lean, we're also hearing, and I know some of them, travelers who've chosen to take a car to Riyadh, to other hubs, to Oman. Obviously, that's emerging. What do we know about those travelers and using those alternative routes?
Yeah, Joanna, we're hearing all these crazy stories about people who are having to evacuate after being locked down. Some have spent 72 hours trying to get out of Doha to Berlin. You know, you have the rich millionaires who are taking these fancy Range Rovers, going and taking private jets from Oman and Saudi Arabia. But you also have the regular everyday traveler who got stuck here. They're having to pay thousands to cab drivers. There are huge WhatsApp chats where people are trying to organize how to get across the border to Oman and how to get to the airport. Oman Air has added dozens of flights to accommodate all the people evacuating. Muscat Airport is swarmed with private jets, and everyday people are having to figure out how to cross these countries that they've never visited, and go through the desert, have to meet up with random people just to get across and to be able to go back home.
Yeah. All right. Bloomberg's Lina Rashdan, thank you for running us through the latest on flight disruptions and what travelers are doing to find a way to leave if they want to. Thank you. Okay, let's take a look at how equity markets are faring. It is actually a better day for global markets. The handover from Asia, at least, has been quite positive. We were speaking about the reaction in Asian equities to the China NPC setting out that new growth target, but also the massive rebound that we had in the Kospi today, up 11%. Just in the last few minutes or so, we've seen S&P futures dip towards the red. We're now 0.3% weaker. And take a look at European markets. Once again, looking to open down substantially, down 0.7% as we continue to keep an eye on the global ramifications of this war, particularly on energy markets. But that is it for Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.